Hello, this is Arvi from Ask Slim. In this video, we are going to walk through the multi-time frame analysis in Xilinx. On the left is our monthly, in the middle is our weekly, and on the right is our daily. So let's go ahead and take a look at the monthly. On the monthly, we have our Heikin Ashi candlesticks, which are like normal candlesticks, but they add a momentum indicator to them. And the function is to help really smooth out and help us visualize the trends that are occurring in a given stock. And we also have our Hull moving average. The Hull moving average is currently negative, as indicated by this purple colored line here. And we have our Heikin Ashi candlesticks, which are now positive. However, these positive candlesticks are occurring in this downtrend with this series of lower highs and lower lows. So the weight of the evidence here indicates that the monthly time frame is still bearish to us. So let's go ahead and jump over to the weekly. On the weekly analysis, we have our cycle brackets here in black, and for those who are new, cycles are measured from important low to important low. We have our purple timing spikes, which help us visualize how those cycle lows have formed relative to the idealized timing. And lastly, we have our colored phasing here, with green phases help us show the rising phases, and the yellow and red phases indicate declining phases. So where are we now? We are in this rising phase here on the weekly and starting to see some signs of stalling at this intermediate term resistance zone from 90 to 96. So what it looks like to us on the weekly is likely some chop back and forth here before any possible resumption here on the downside with a fib target zone down at this 74 to 70 area. The next intermediate term low is due between the end of July and early September. Now, I also wanted to share a more bullish scenario that may set up here. It's too early to tell if this could happen, but I wanted to share it in any case. If we get a rally that has Xilinx sitting up in that intermediate term resistance and then forms a higher low into this next cycle timing, that would indicate a basing cycle, and it would say that the odds favored, once this next intermediate term rising phase starts, that we would get a meaningful rally on the upside. So I wanted to share that scenario with you because it's important to always be aware of both the bull case and bear case. However, currently, given that we are in this downtrend, the odds favor a failure in this intermediate term resistance zone followed by a resumption lower. So let's go ahead and jump over to the daily. On the daily, the cycles that we were looking at on the daily were not consistent, and we therefore opted to not include those in this analysis. We do have our slim ribbon, which is the 81321 EMA, and we also have our Hull moving average on the daily. So what we're looking for is more of a range to really form here, with the upside around this 90 to 92 range and the downside in this 8270 to 77 range. So we're really looking just for back and forth kind of trade here in the short term. So let's go ahead and do a review of the overall analysis. On the monthly, we have a bearish setup with positive Heikin Ashi candles and a negative Hull. On the weekly, we are in this rising phase and seeing some signs of failure, so we'd be looking for, again, back and forth here for a few weeks. And on the daily, again, similarly, we are looking for back and forth trade in this 92 to 90 range on the upside and this 8270 to 77 level on the downside.